there. Dipan Mehta is with us with quick thoughts on what the market may do. Dipan, good to have you here. Two things tomorrow, right? Even as we go into that long weekend. Prime Minister Modi's speech at the margin, some expectations that maybe, he will outline what he wants to do next because of the situation we find ourselves in. The second, of course, is this meeting in Alaska, where I think if you read the global media, it looks like you've got to dial back expectations of a breakthrough after the first meeting. It was looking pretty big, but I think they've themselves watered it down a little bit. Don't expect too much. So near term, Dipan, what's the market direction looking like to you?
Yeah, good morning, Prashant, and thank you for having me on your show. I think the same trend, sideways movement, because liquidity is not letting the market sink and fundamentals don't justify markets to move up. So that's where we are. And I think largely the market and the corporate India is absorbing and understanding how these tariffs will work out, because it's not just the direct impact of exports to US, but the overall competitiveness of the Indian exporting community, because it may impact even revenues from other geographies, because we are constrained from selling to the US. So there are a lot of moving parts over here. And on the whole, this earnings season also has not been that great for the reasons that we all know. 5.5, 5.6% type of aggregate net profit growth, lowest in last 2 years, is certainly not impressive. But I think that the festive season has started on a good positive note. Even FMCG revenues have picked up, volumes have picked up over there. So we remain hopeful, because the only way this market can go back to its old highs is we have a strong rebound in earnings.
A couple of numbers today are also pretty good. Jubilant FoodWorks is, for Domino's India, like-for-like growth is in double digits. For Vishal Mega Mart too, for the 5th straight quarter, it's reported a double-digit same-store sales growth. So some of these numbers too are showing a pickup. Dipan, morning. I think you like Apollo Hospitals. That's a part of your portfolio?
Yes, it is.
Yeah, big move yesterday.
It's one of the few companies which have brought a smile to our faces in this particular quarter. I think exceptionally good numbers. And now they are firing on all cylinders. Losses have been curbed. And most importantly, looking forward to the split which they are doing in the company. I think that will unlock even more value for minority shareholders. Only thing I think that investors should keep in mind is that they are entering into a very aggressive period of expansion of hospital beds. And whenever that has happened in the past, it does tend to impact the profit margins, because the new hospitals are not immediately profitable. And although the management will give the split between the new hospitals and the old hospitals, but nonetheless, I think that we should be entering a period of investment phase for these new hospitals, which may impact the hospital business revenues, not revenues, but at least the operating profit margins. So we need to keep that in mind, that these results are good, but we're in for some curtailment or pressure on the margins as new hospitals go on stream.
Dipan, haven't met you for a while actually, and even Junior Mehta. Maybe it's time to grab a drink or maybe a pizza. We'll see how that goes, but we should do that shortly because I haven't met the Junior as well. But that said, what's the view? Jubilant FoodWorks as well as United Spirits, both of them came out with a set of numbers. Your take?
See, I think United Spirits is now passé, because the way the Indian alcobev industry is doing, they are really doing exceptionally well as compared to United Breweries and even United Spirits for that matter. We look at Radico Khaitan, the numbers which came through, Tilak Nagar Industries, Allied Blenders, Associated Breweries. Across the board, I think Indian alcobev industry is really surging. And it's a good place if you want to place a bet on the FMCG side. I would say that these are the kind of new FMCG companies that investors can focus on. So I would avoid United Spirits, go for these local alcobev companies. And Jubilant FoodWorks, from time to time, 1 or 2 quarters do come which are exceptionally strong. But this entire quick service restaurant business doesn't look to be as optimistic as before. There's a lot of competition from the likes of Swiggy and Zomato, which have now placed a whole host of dark restaurants and smaller restaurants at par with the likes of Domino's and other quick service restaurants. So I would prefer to avoid these companies. And in any case, I think they're trading at extremely rich multiples. And now a lot of the revenues for the QSR companies is coming from outside India, where markets may not be as robust and as vibrant as they are in India.
Any thoughts here?
Yeah, while you were just talking about this company, I just quickly checked up, and the biggest investor amongst the four is Artham Investment. It's a listed company owned by Mr. Sanjay Dangi, and they have a very good track record in terms of identifying stocks and multi-bagger stocks, and then nurturing those companies to scale up. And maybe something similar can happen in Merck Electronics. See, there's a lot of interest in this electronic and consumer product outsourcing. And even if one or two contracts come through to Merck Electronics, then certainly they can scale up the business pretty well. And there are export opportunities as well for such companies. So I'm hopeful that something positive will come out of this particular development.
Yeah. I don't know if you have any thoughts here on this topic and how it plays out. Deepan, you have to unmute yourself, please.
Sorry. No, I think it's positive for the entire Indian economy if the ties with China certainly improve. There's a lot of scope for cooperation as well, and there are export opportunities as well. And certainly, I think certain Indian companies also benefit from Chinese technologies or from investments done by Chinese companies into India. So we remain hopeful. But end of the day, we have to focus on domestic-oriented businesses, as I understand. And these things keep on happening with China on and off, and then there's some skirmish, and then ties get worsened, and it does tend to create a lot of volatility if you are basing your investment theme purely on external partners. So that's what my thoughts are.
Okay, let's see how, for now at least, there seems to be some cautious engagement between the two countries. We'll have to see how they forge ties going ahead. But